This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, and this is one of those recordings where I just need to take back and take the lumps. If you've been watching my channel for any length of time, you know that I've been able to give Taylor grief for 3 months in a row.
Oh, you've crushed me.
Rightfully so. Fun. It was fun. But now I need to step back because he called CPI headline being sub 8%. I said he's ready for a beating round 4, which he was a man and said, if it happens, it happens. And he was right. So I'm going to sit back and let you take your victory lap. CPI headline was 7.7. What do you think? Is this the trend? What's going on?
It'll be interesting. I don't know. I mean, I certainly hope it's a trend. I certainly hope it's a trend for everyone's sake, right? But admittedly, if you look back to July, we saw this before. So we saw a tick down and then a tick back up. So I don't know. We're going to have to continue to watch the data here, but it was nice to see a reprieve. And it was finally the first fresh of breath air that we've gotten to take. The market obviously went in fuego for the day on it. And you actually did get some follow through thereafter. So is it overcooked in the short term? Yes. It probably is overcooked the market in the short term. But nonetheless, this was the first time. Again, when you think about investing, et cetera, it's all about rate of change. It's not about what is the specific number. It's the direction that they're moving, right? So right now, the economy is still positive. GDP is still positive, at least in the macro standpoint, but the direction is not good. So, inflation seems to have rolled over. The Fed's work has seemed to finally, kind of cut down on inflation. We'll see if it continues. What are your thoughts? I'll stop babbling.
Well, I think there's a couple of things. I think inflation readings get a little bit easier from here because of the base effect, right? That's something both you and I know. Basically, base effect for the folks watching is we're only comparing like for like November to November, December to December. And if you guys don't realize, we've been in high inflation for over a year now. So we're starting to roll off bigger and bigger numbers. So the compares get easier, right? That's something that just is true.
And to that point, like when we're talking about getting back to 2% inflation, that's not like going back down. That's just growing at a smaller clip. So it's not, our intention is not even to get back to, oh my gosh, prices are so high, we need to go back to where they were 2 years ago. Like that's not happening.
Yeah, just for numbers, let's say, for example, a widget cost you $100 in 2020 or 2019.
Yep.
And we've had 10% inflation. It's now $110. We're talking about 2% from here. That will take it to $112.2 or whatever it is. Right.
Nicely done.
Yeah, there you go. I've done this before. So again, it's not going to 102 is the story, right? So we're just going to go smaller. So it's really interesting times. I was so surprised by the 7.7. I dug in later that evening, and there's some kind of wacky one-time adjustments that are unusual, specifically healthcare.
Inform me. I'm not aware of this, so inform me.
Yeah, so healthcare has a once-a-year adjustment where healthcare went from being +2 to -4.
Yep, I did see that.
Anybody think healthcare got cheaper by 4%? In the last month? Yeah. No. So that was unusual. I didn't do the math. Somebody else did. So this could be fake news. But basically, they said if you had put healthcare in as a 0, core would have been a higher reading, a 6.6. So it would have gone up. So it was 6.5. It called 6.3. I called 6.6. Somebody did the math that says if you just had healthcare at 0, it would have been 6.6. And
which again folks, is interesting because that's directionally higher, not directionally lower. Right. And that was the point that we tried to make before. It's not the number per se. It's where is it coming from up or down standpoint.
And it would have been a new high, right? So it would have been, so this is, it raises questions. But we did see enough deterioration in other things. Like a lot of the readings the last 3 months, we looked at it, it's like everything's more expensive. We're at least now starting to see some goods, which is really the only thing that can deflate, go negative, which is good. So it'll be very interesting to see. To me, at this point, I believe Powell has told us, this CPI, PPI, all this other stuff is really for the media to jump on. We're going to see PCE core. I think it's next week. That's the number.
Yeah.
That's the number.
Is it? It might be this week. It might be Thursday of this week. Is it?
I don't think so. I think it's next week.
Okay. I was wrong. There's another meaningful inflation stat that's coming out this week. So it's
Yeah. The big number for me this week is retail sales Wednesday.
Oh yeah, that's a big one.
Yeah. So let's talk about that. So again, we live in interesting times, Taylor, where good news is bad news and bad news is good news. So
Yeah.
I think the forecast for retail sales is a positive 0.9. Let's just call it 1%. And for people that don't know what this means is if the consumer is strong, which we'll call 1.5 strong, so meaningfully above expectations, I think that drives rates higher, and I think that hurts the stock market. Whereas if it comes in light, let's call it a half, this rally keeps going. What do you think?
I think there's no doubt about that. Again, we are looking for bad news right now. We are looking for
it's weird, right? Bad news.
Yeah. Point blank, we're looking for bad news, guys. Yeah, we need people to stop spending. Like that is, it's a self-fulfilling prophecy. People spend, drive prices higher, inflation gets more meaningful, and it gets more entrenched in what we do. But what we're trying to do clearly is affect people's ability to borrow money, which affects their ability to spend money on the other end. You obviously see it most meaningfully in mortgages being significantly more expensive. Now, that's not retail sales. I get it. But I'm just saying that's an example of how we see the costs of debt going up. You look at it in credit card debt. If people can't afford to pay the credit card debts, obviously they need to start curbing their spending. It's just, again, a spiraling effect downhill. And I do think that retail sales is starting to come in. I think you can see it in the company earnings. And I also think anecdotally, I think you can see it. I think that when you look around, most people would say, I have made adjustments to my lifestyle at this point. And maybe I'm wrong there. Is that your take as well?
It's certainly what I hope for. I have this sneaky suspicion that we are going to have one last party.
Yeah. Yeah.
I think this, like this holiday season, I think there's a couple of things that are going to happen. This is going to be the first holiday season where like just the nonsense is over, right?
Right.
Fucking nonsense is over. And I think people are going to spend like crazy. And oh, by the way, they're going to get deals, right? Because retailers got a lot of extra stuff. So
well, I was about to counterpoint you. I was going to counterpoint you and say, yeah, well, I see where you're coming from there. I was going to counterpoint you and say, at least they're going to be spending less on that particular good because there's so much inventory afloat. But maybe your point is they wouldn't have bought it otherwise. So now they're just going to buy it and spend. Yeah. Granted, it'd be less than it would have cost, but they wouldn't have bought it otherwise.
They wouldn't have bought it. So retail sales in totality will go up. So that's interesting. I'm not a buyer.
I'm not a buyer of that thought process, for the record. But I will say that I to your point, like I think people will spend, but I think that there's inventory gluts, so the cost reduction is going to bleed through. And I just think, and maybe it's my cohort, like I'm 34, and I think most 34-year-olds are in the prime age that feel this, like, especially you have a kid or two, like it's tough. It is really tough with food costs getting so expensive, and you have to squeeze.
You got to feed those damn kids.
Those damn kids are hungry all day, every day, and they like expensive stuff. Like, these little yogurt pouches, they cost $1 each. They eat like 9 of them a day. I'm like, guys, slow down.
Damn, slow down. Right? That's amazing. So the last thing I want to talk about in this discussion with your CPI victory lap, which again, you totally deserve. And I you were right, is Fed Waller. Did you see his thoughts this morning?
I did not see thoughts on the no, not this morning. No.
So Waller, for folks that don't know, is kind of Powell's lieutenant, right? The most trusted guy. He came out today. I think he was being interviewed in Australia for an Australia something or other. He basically said these 2 quotes. He said a lot, but I'll give you 2 quotes. 1, everyone should take a deep breath, calm down. We have a ways to go.
Yep. And the woman out on the West Coast, the San Francisco Fed,
Mary something. Mary.
Yep, she said the same thing. Like 3 or 4 people have come out and said the exact same thing. That to our point before of like when he goes back in and again, this wasn't after a statement of his, but like now his next statement might be one of those like, guys, shut up. Like, I don't want the market running like it is. Like he legitimately does not want the stock market to do what it just did.
Oh, he's going to come out and be even harder.
Powell, by the way.
Yeah. So it's funny because again, I believe the Fed, and we're about to see it played out. The Fed has 2 tools. One is obviously the Fed rate, right? Which we get, generally speaking, every 6 weeks.
Yep.
They also have this thing called a voice. And Powell is about to get loud and angry and Jackson Hole like, and they can't like what happened last week. They just can't.
Yep. Yeah. So here's interesting, like what we've been echoing from our company, and it's not about our investments, whatever. It's just about investing in general and taking a logical approach. So we have been bearish the entire year. Starting September 26th, we started to say, okay, guys, we're not saying we're at a bottom by any stretch of the imagination, but what we're starting to feel comfortable is that we're within 10% of the bottom, 15%, whatever it is. But what you don't want to miss is those epic bounces off the bottom. So what we started to tell people is like, hey, take money for the next 8 months, chunk it up into 8 pieces and fire it at the market on, the third Thursday of every month, whatever it is, but make it specific.
Yeah.
And so the point of me saying all this is like last Thursday was one of those days. The days off the bottom, if you look at the last 50 years, the days off the bottom, the top 10 days come in 2008, 2009, 2020, 3 brutal markets. And then, what's the last one? 2 days after the Black Monday of 1987. Like the biggest eruptions happened right off the bottom. So you want to at least have some money getting to work at that point. So you're not missing that. And the market was up, 5.5%. The NASDAQ was crazy up almost 7.5%. Yeah. Like those are massive wealth effect days that you want to be involved with.
Yeah.
And I'm not.
So no, go ahead.
Just the last thing I'll say is like, the thing that we're getting from everybody on social media is like, not yet. Okay. Well, why don't you come tell me when it's time? Why don't you come tell me when the bottom's in? Because you're going to ring the bell.
Yeah. I was going to say, where's the bell? Yeah. Where's the bell? So just a couple of things. First and foremost, if people watch my channel, they'll know for the first time in 15 years, I started putting money to work about a month ago.
Yep.
Thanks to conversations we've had. And I'm up on every trade. And I was up a lot last week, so I'm pretty happy with that.
I love it. I love it.
So
I love
again,
it.
yeah, and again, I did tranches. I didn't do 8. I did 4 tranches, so I got a couple of tranches in, not everything. But yeah, it's just when you get close enough, nobody calls the bottom. I know that, and I just picked assets, a lot of stuff with dividends. Because I'm old. I'm not 34, as you shared earlier. My daughter's 31. Thank you very much. So
you look great, by the way.
Yeah,
you look great.
I look great. Well, I appreciate that. You do a lot of stuff to help the average investor on Instagram. What is the page? What should they follow?
Yeah, follow us at Life Goal Investments. Again, we're just trying to make things easier. That's the overarching message that we're trying to put out, is just simplifying the investment tactics.
Awesome. Thank you so much.